Welcome to the daily insights that matter. According to data from the Reserve Bank of India, credit card spending fell by 11% sequentially in November at 1.15 lakh crores but remained above the 1 lakh crore mark for the ninth straight month as the festive season ended and the consumption activity slowed down. Now, the spending on a year-on-year basis was, however, up by 29%. Credit card spends has touched an all-time high of 1.29 lakh crore rupees in the month of October as they were driven by the festive season and consumption activity. Now, transactions in volume terms fell 8% in November to 235.1 million. Per card spend stood at 4,884 rupees compared to 5,050 rupees in October, which was lower by 3.2%. Now, the banking industry added about 1.3 million cards, taking the total number of outstanding credit cards to 80.66 million as of November. Now, on average, the industry has been witnessing a net addition of about 1.5 million credit cards monthly as more and more banks and NBFCs had been aggressive in the unsecured lending business post the pandemic. Now, credit card spends is a key indicator of consumer demand within the economy. For the month of November, credit card spends were led by the rising share of e-commerce transactions and the return of travel and hospitality spending after having been subdued due to the pandemic-related restrictions. Now, the volatility in credit card spending was on account of the festive season, which came to an end in November, which was in line with expectations. Going forward, we expect the card spends to further moderate over the next couple of months due to the end of the festive season and the inflationary impact on consumer spending. Additionally, the linking of RuPay cards with the UPI will be useful for Tier 2 to Tier 4 cities as these cities lack the point of sale infrastructure. Now, with China's massive construction sector still in a consolidation stage and the US and Europe headed for a recession, India has emerged as a savior for the faltering global steel market. Now, in an effort to compete with China as a manufacturing hub, Prime Minister Modi ji is attempting to revamp the country's ports, railways and roadways. Now, according to the World Steel Association, this will cause the demand for steel to rise by 6.7% in 2023, reaching over 120 million tons. Now, the growth rate will be the highest amongst the major economies. Now, this outlook has set off a flurry of activity as ArcelorMittal Nippon Steel India Limited has plans to more than triple their capacity in the coming decade, while South Korean steelmaker POSCO Holdings Inc. are exploring options to set up mills in the country with the Adani Group. Now, although India manufactures a vast majority of the steel that it consumes, it is still required to import more to keep up with the spike in demand. Now, even though imports are fairly cheap, the issue with that is that the imported steel is of poor quality. While industry experts have called for the government intervention in such issues, inbound shipments continue to rise. From April through October, inbound shipments increased 15% year-on-year to 3.1 million tons. Now, the nation-building phase of any economy requires a lot of steel and commodities. India is going through that phase in this decade, and it could boost the country's steel consumption to over 200 million tons by 2030. Now, India has already overtaken the US to become the second largest steel consumer in the world after China. The Ministry of Finance is estimating a $1.4 trillion funding requirement for funding the national infrastructure pipeline through 2025. Hence, steel will continue to remain a very relevant sector for India going forward. Having said that, China's real estate problems and the lingering impact of COVID-19 will keep its steel demand suppressed for the next year as well. So what does all of this news mean for you? While the decline in the credit card spends in November was in line with the expectations, it still remains above the 1 lakh crore mark. Going forward, we expect card spends to further moderate over the next couple of months due to the end of the festive season. This will therefore have an indirect neutral impact on you. While China's steel demand is expected to be restrained in the coming year due to its real estate issues and the effects of COVID-19, India is concentrating on the development of its infrastructure, which will provide a boost to the economy. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.